So you want to share your screen, sir? You can, by the way, you can do that.
I can right now?
Yeah, you can. No worries.
Okay, yes.
So let all of the participants, let them join first. Probably we can actually wait
Yes.
for one more
Is it
minute.
visible now?
Well, yeah, it's visible. Yes. Great. I think a lot of people have already joined, and I can see the number is still increasing, which is very encouraging. Good afternoon, everyone. My name is Saqib, and I'm the regional director of IFA for UAE, Kuwait, and Oman. We have, like, of course, I need to give the introduction. This is why I'm here today. Introduction of Dr. Rahul. Dr. Rahul Sharma is, like kind enough. He's kind of, given us time and for this particular webinar, and we have further more webinars coming up as like kind of a joint uh, initiative between IFA and Skyline University College, because Skyline University College is one of our IFA direct centers in UAE now. And so he is the he leads as associate professor in at Skyline University College, and he actually leads the accounting and finance division, where he leads all the academic side, teaching specifically for the accounting and finance. Very energetic guy. I know him for a very long period now, and I know that it's going to be a very good opportunity for everyone to hear from him. Um, we do have a lot more webinars coming up. By the way, we have another one which is already planned. A lot of new webinars are we are kind of setting up right now, and it's really important for everyone to stay connected. And take this opportunity. It's really important for everyone. Thank you so much, everyone. I'll just kind of hand over the stage now to Dr. Rahul. Thank you.
Thank you, Mr. Saqib, for introducing me and for your kind words. So without a further ado, because this we have got 60 minutes and the things are too
Yeah, of
many
course.
things
I
are
know,
there
I
to
know, I know,
discuss.
I know.
So I will
We
not be
try
wasting
to
much
keep it,
time.
absolutely. We try to keep it very simple and
Yes.
concise, so everyone can take the advantage of short and quick.
Yes. And the 60 minutes is perfect. Yes.
Perfect. That's
So I'll
right.
try to justify and without wasting further time, I'll be moving to the agenda. So in this session, we are going to talk about, first I'll be talking about the cryptocurrencies overview, then different types of digital currencies which are available in the market, then key features of digital currencies, then the status of digital currencies, how the market capitalization is moving and what is the growth, so all those things we'll be discussing under the section. Then impact on financial markets, which will include the financial markets as a whole and capital markets and banking markets also. And then why regulation is required in digital currencies. And then we'll be discussing risk and opportunities in digital currency domain. And last but not the least, why we are attending this session. What finance professionals should watch in the market of digital currencies. So we will be discussing all those things. So I'm sure that no one is there in this webinar who has not heard about digital currencies. And we know that these digital currencies has disrupted the market, has disrupted the finance domain. The way they started in 2009 after the 2008 crisis, when people were finding for some alternate investment options. So these digital currencies with a name they started in 2009 with the beginning of Bitcoins. And since then, cryptocurrencies have been moving in different categories also. We know these digital currencies as cryptocurrencies, stable coins, and nowadays another new term which has come, and most of the countries are doing some research, some pilot studies to see the viability of digital currencies, that how can they adopt these digital currencies in the system, in their economy. And almost we'll be discussing that how many countries are discussing and what is specifically UAE is doing with respect to CBDCs. So since then, all these different types of currencies are there, then the challenge traditional financial system by offering decentralized alternatives and promise faster, more transparent transaction. when I was a student, we learned that what is money? Money is a medium of exchange. This is what we studied, and which should also be a legal tender. So when we are talking about, so this digital currency has challenged that traditional financial currency, traditional financial system, because we can also use the same nowadays for the purpose of exchange of goods and services. We can use to transfer money from one place to another place. And the best thing in this is that it can easily be transferred and across the globe. So those things are there. So we will be discussing that what are the challenges of so easy transfer, what are the things that we need to consider into mind while using digital currencies, what are the things that government or regulator need to consider while dealing in digital currencies or while allowing these digital currencies. Initially, some countries were or some governments were reluctant to adopt digital currencies, but now the time is that you cannot avoid them, you cannot ignore it. If you have to move with the market, then you'll have to follow the trend which is there going on. So for finance professionals, understanding digital currency is critical due to its growing influence on capital market, payment systems, as well as regulations. And that's why we decided that we will be talking about the impact, that what impact it is going to have on financial markets. So before we start, sometimes we get confused that what are the different, whether the cryptocurrency itself is a currency or is it like Bitcoin. Some people uh, interchangeably use the words cryptocurrency and Bitcoins, cryptocurrencies. And nowadays, these memes are also available. If you remember, almost around 1 month back or 1.5 months back, when Trump took the his second started playing his second inning, then he also issued his memes, and then his wife Melania also issued. So what these memes are there, and he made huge money by the launch of Trump memes. So what those things are there? So we'll be discussing the major digital currencies here in this particular topic because we've got limited time. So first, digital currency. So we'll be talking about cryptocurrencies. We'll be talking about stable coins and CBDC, what these CBDCs are. So cryptocurrencies, these are the decentralized digital assets like Bitcoins and Ethereum, which are based on blockchain technology. So the Bitcoin was the first digital currency, and then it was followed by Ethereum. And even now, the Bitcoin has around 47% market share in the field of digital currency. So, and for your information, I'd like to tell you that there are, if you will Google, there are thousands of digital currencies which are in circulation. So we need to take care while we are investing or while we are suggesting someone to invest in cryptocurrency. Which cryptocurrency should we invest? Where should we suggest to invest? Because thousands of currencies are there. So, like in stock market, there are different stocks, different companies are there. So we cannot invest in every company, and we should not invest in all companies also. So we need to know that which are fundamentally strong, which are good, on which we can rely, which have got the longevity. So we will be discussing all those things. But before that, we need to understand how does this blockchain technology works. So I'm using this particular uh, image to explain you that what blockchain technology is there, and then how digital assets work using digital assets use this blockchain technology. Maybe these digital assets may be Bitcoins, or it may be CBDC, it may be anything. So if you are using money in digital form, then that will be that means those organizations, those banks must be using this technology in one or the other way. So how blockchain technology works? Like you all, I'm sure that nowadays you are using internet banking, mobile banking. So when as a user, I'm putting some request to my account or to my bank that I want to transfer this particular money to Mr. X. So I will be giving command to my system using my laptop or mobile phone. And then you must be knowing that we put some password, we put some OTP. So how all those things works? Earlier, the system was there that these things were being kept by the banks in the common server, and there was the major problem was that if that server is going to hack, then we will be losing our data, and we many people were reluctant using that net banking at that time. But nowadays, what happens that the government, these organizations use different system that is called P2P, where the transaction is broadcasted to a P2P network that consists of computers. That means, for example, if your password is, say, about Zoom, so I'm trying to explain it in easy words to you, so that it's in simple words, so that you can understand. So, for example, you have kept your password as Zoom. So the entire password will not be kept at one location, at one server. It will be dissected into various sections. So maybe Z will be there on one node, O will be there on another node, O. And this is what how blockchain, that means your password will be protected in different nodes. So the network of nodes use known algorithms to validate the transaction. When you put the password, when you put those OTPs, then those different systems. So it's very difficult to hack. I'm saying difficult, but I'm not saying it's impossible. Right. So it's very difficult for to hack all those things, and that's how it provides security for using all those things. And a verified transaction can involve cryptocurrency contracts, record on those other information, and then these transactions are then combined. So those different blocks will be added together, and then it will be moved and will be showing the correct password or correct scenario to the banker, that now all the things are matching, so you can transfer the money to the other person, or you can follow the instructions provided by the user. And that's how this transaction is being completed. So this is what is blockchain technology is there, and this is how blockchain technology works. And these digital assets, especially cryptocurrencies, so these cryptocurrencies use this technology. And remember that I've just mentioned here major two currencies, which is Bitcoins and Ethereum, but there are thousands of currencies. Even we may not have heard the names of those. So don't invest in any cryptocurrency, in any digital currency, just for the sake of having profit, because in short term it may give you, but you never know that what is the security. If you are, because safety is first, then comes return. When I teach to my students, we talk about that risk and return goes hand in hand. But we need to see that at least I should be able to get my principal amount. So we need to be careful while investing in these cryptocurrencies also. Then second kind of digital currency is there, which is stable coins. And these stable coins are which the currencies which have where the value is being pegged or tied to some other currency. For example, if the central bank of any country is going to issue some uh, print some new currency notes, so what will they be doing? They cannot print the way they want. Otherwise, they will not. We will be thinking that there will not be any poor. Sometimes people ask, or sometimes my student asks, that why don't central banks print as many notes as they can? No, it's not, because we need to consider the inflation also in check. If we will be printing those currency notes the way we want, then people will not be having the value of money. And we know that when inflation is there, value of money goes down. So similarly, to overcome the problem of cryptocurrencies, there came the stable coins, where the cryptocurrency was pegged, its value was pegged with some other currency, maybe the physical currency, or maybe with some commodity like gold, silver, or any other asset, or maybe with some financial instrument. What does it mean? What is the meaning of this pegging? Pegging means that you cannot issue new currency until you have got some value of the physical assets, commodity, or financial instrument. So to make it simple, I'll explain you that if suppose the government wants to print 100 dirhams currency note, so that means we need to have some gold, may not be equivalent to 100 dirham, but at least to 30 dirham, 40 dirham, whatever that central bank has announced. So if I will be having 40 dirham, then I can print currency notes of 100 dirham. If I've got the gold worth 80 dirham, I can print up to 200 dirham, then 300 dirham, 400 dirham, like this. So that means I have pegged my dirham with gold. I'm just giving you an imaginary example. So, like we know that dollar and UAE dirham, they are having a fixed relationship. Dirham is pegged with dollar. So until we will be having this much dollars, we will not be able to print. So the government of UAE, central bank of UAE, has pegged its currency. So this similarly, these stable coins are pegged. In this case, that so this is what a stable coin is said. Why are we calling it a stable coin? Because here the value remains stable as compared to if we do not have any security. So we can print anything, and then the investor who is investing, who does not know the nitty gritty of that cryptocurrency, then he may be losing his money. So bring the more trust factor into the cryptocurrency. These stable coins were launched. I hope it's clear. And then comes the CBDC. CBDCs are government-issued digital currencies, and nowadays, in many countries, we will be discussing about those few of those countries which are using this CBDC. But for your kind information, I'd like to tell you that in March 2023, Central Bank of UAE also launched CBDC, and they call it the digital dirham. So China is using this, and other countries, even some African countries, have purely moved to this CBDC. We will be discussing those. So these are the digital currencies which are being issued by government of that central bank of that country. May obviously in association with other banks, and sometimes in some countries, governments have allowed different banks that you can open, you can issue your digital currencies. And these digital currencies, for that matter, are same as we have got our physical currency, these paper currency notes. Like in digital currency also, there will be currency notes of 5 dirham, 10 dirham, 20 dirham, 50 dirham, 100, 500, and 1000 dirham. And if you want to exchange, suppose, I'll just give you a brief example because I believe that there may be some people who may have heard, but then sometimes we have not entered into those details. So if someone has got in his wallet, and this, yes, for sure, this CBDC is being kept in the wallet. So if you are keeping this CBDCs or in your wallet, then if you have got 20 dirham notes, and if you are spending 15 dirham, then you can, there are wallets where you can put a value, and when you will be transferring the money of 15 dirham to some other person, you can mention 15 dirham, and that 15 dirham will be transferred to the person to whom you want to transfer, and remaining 5 balance will be shown in your wallet. So these are as good as uh, physical currency notes, but the uh, benefit is that we need not to worry about losing or destroying all those things. The only thing is we need to have our mobile, and we can have that, and security, and no problem of space also. You can have as many currency notes in your digital wallet as you want. But if you are having thousand notes, sometimes when I get from the ATM, then there's a huge tension that what you will be doing with this 5 or 10 notes. So those problems will not be there in case of uh, digital currency or CBDCs. So these are the 3 main types of digital currencies, which are cryptocurrencies, uh, stable coins, and CBDC. So understanding the digital currencies, we will understand that what are the characteristics of digital currency, key features, so that we can identify whether this is a digital currency or not. So first thing is it is decentralized. Like I told you in the first, when we were discussing about the cryptocurrencies, that nothing is being kept on a single server. These are being decentralized. So when we are decentralizing the things, then it provides us more security, and it also reduces the transaction cost. So this decentralized nature of digital currency weakens the intermediary role of traditional financial institutions, because you need not to keep all those things. You need not to approach the banker for every transaction. You can simply enter all those details, and when banker is not there, he need not to hire the staff. And when he is not going to hire the staff, then obviously his cost will go down. So this is how the decentralization helps in cutting cost. It helps in providing faster and secure transfer. So the second is security, digital currencies use advanced cryptography technology to ensure the security and anonymity of transactions. So we do not know who is allowing me. There is someone on some node who is allowing my transaction. Neither that person knows that he is allowing it to Dr. Rahul, nor Dr. Rahul knows that who is allowing it. So there is proper anonymity, there is proper security, and because we are having different nodes, I've just given you in that image the examples only, but there may be n number of that we might not have even thought. So security is another feature of digital currency, and transparency, because no one is holding all these things. The data is publicly available. So transaction records of digital currencies are stored on a publicly available blockchain, making transaction more transparent. So you are not having any fear that if prices are going up, there may be some kind of insider trading, there may be some kind of influence of the person who is mining these coins. So all those things will not be there. And that's how it provides transparency as well as security. And last thing is, it is nowadays globally accepted. So these are not restricted by geography and can be circulated globally without obstacles. Even if you want to transfer some dirham to some other person, if you're following legal channels, then we can transfer, but we have to follow those practices. But if someone wants to transfer illegally, then he'll have to face the music. So, but in case of digital currencies, now those global boundaries are not there, and it is not restricted. I need not to convert my currency into another person's currency, or the other person to whom I'm making the payment, he need not to convert. I can simply transfer here and he will be getting in his currency. So this is the beauty of this digital currency, that globally these are acceptable. Otherwise, if I'm going to receive some money maybe from US, then I will be getting dollars and then I need to convert, or I will ask the other person, then he will be converting into dirham and then he will be sending it to me. But these obstacles are no more there. So why, when we are spending this time on digital currency, then we need to understand why we are talking about. Just see this particular slide, especially that as of January 2025, the global crypto market capitalization is has reached to $3.32 trillion. So you can imagine the size globally. And the net market revenue of cryptocurrency is projected to reach $45.3 billion in 2025. So which is again huge. And on January 2025, only Bitcoins, like I told you, there are thousands of currencies. Sorry, I was mentioning 47%, but it's 57.2%. As on January 2025 only, the only Bitcoin, only one currency holds around 57.2% market share. So this is the trust of the people that is with the Bitcoins. And that's why I was suggesting that if you are planning to learn to invest in cryptocurrency, then instead of going to any other currency, this you can start investing with Bitcoins. So this alone holds 57.2% market share, and there are 38,865 crypto ATMs in the world. So if you have got cryptocurrency in your wallet, you are going to some other country, you want to withdraw some money using those ATMs, you can also get the physical currency. So it's not that only you need to find out a person who will be accepting cryptocurrency. No, now there are 8,865 crypto ATMs. So why I'm telling you all these numbers, just not only these numbers are fascinating, but these numbers also tells us a story that this is going to be the future. We cannot say, I was saying 2-3 years back that I don't trust cryptocurrencies. I don't trust, because you don't know who is controlling, how the prices are going up, how the prices are going down. But for long, you cannot avoid that. I generally say this to my students that you may love it, you may hate it, but you cannot ignore it. And as a finance professional, we need to understand. I'm not saying that we need to invest. At least we need to understand that how this is moving, because this is going to affect all our market. This is going to affect our financial market. So the earlier we will learn about this particular currency, the better it will be for our future. Because the regulations obviously will also be changing, but again, it will be changing. So it will be easy for us to understand all those regulations. So this is one thing, and one number about the ATMs, crypto ATMs. So you can go to any country, and then if you are finding crypto ATMs, then you can simply withdraw cash from that country's ATM, obviously in that currency only. Then there are 34% of cryptocurrency owners worldwide. This is another thing. So if a person is a user who is using owner of the cryptocurrency, if 34% are between the age of 25 to 34, so which is the highest percentage under any age bracket, that means when these people will grow, so they will be very much familiar with using cryptocurrency, and when they are familiar, obviously they will prefer using this money. They will prefer transferring cryptocurrencies only. They'll prefer to accept cryptocurrencies. And at that time, I should not be out of that particular league. So I also need to learn about the cryptocurrency. And also, for your information, the second lot, highest percentage of owners of cryptocurrency is from 35 to 44. So this age bracket, 25 to 34, is leading, which has highest percentage of 34%. But the second one is 35 to 44, who are following this first batch in using cryptocurrency. I'm not talking about those people who are above 45 years of age, because they may have got some reservation using this. I'm not saying that they are not using, they may be using. But then sometimes it happens that when technology is changing, then we refrain to use that technology so easily. Like when computerization took place in banks or railways, so then people were thinking that all these things will take their jobs. Similarly, now people are thinking, no, I cannot invest my money, I cannot use this because I don't know who's controlling it, and I don't know what will happen. So trust will come gradually, but this is the age bracket, 25 to 34 years and 35 to 44 years, who are using it the most. And all these things I've mentioned using different references from Coin Market Cap, Coin ATM Radar, Statista, as well as AAA 25 data. So these are valid data that I've presented in front of you. Now, the impact of impact of digital currency on financial market. So we'll discuss each one by one, how it is impacting the financial market. The first point is price volatility. We know that cryptocurrencies prices are very volatile. So, and it is very risky also. So this volatility also affects our capital market. How come? That if as an investor of capital market, if I'm finding that I'm not getting much return in capital market, while on the other hand, cryptocurrency is appearing to be more attracted, is appearing to be more beneficial, which is giving me more profit. So I may be tempted to invest my money from capital market to cryptocurrency market. So this will affect, and similarly, if profit are going down over there, prices are going down, then also it may affect my financial market. And by the way, nowadays this cryptocurrency market is also the part of financial market. So this price volatility affects the investor behavior. It also affects the investment of people from one category of asset to another category of asset. So this is one thing which affects the financial market. Second thing is the lack of knowledge of fundamental values. What is it? We all know that if I'm investing my money in capital market, for example, if I'm investing my money, and I take the example of Dubai-based company, which is Salik. So if I'm thinking to invest my money in Salik stock, then I would like to do fundamental analysis, obviously I'm talking about a long-term investment. I'm not talking about the day trading. So if I would like to see the fundamental analysis, I would like to find out that inflation rate, I would like to study the geopolitical scenarios, I would like to study the financial position of the company, I'd like to see the businesses in which the company is and the business model on which this company is working. So all, you know, because all of you are from finance domain only, so you know all those things. But sometimes when we are investing in cryptocurrencies, we do not know actually why this is going up and down. Though it is said that these are fundamental value also works. Inflation, same inflation will be there, same geopolitical environment will affect the cryptocurrencies also, and the relationship between different countries, even trade war, everything will affect this cryptocurrency also. But then again, there is a lack of knowledge of all fundamental values about cryptocurrency. In case of company, I know that this is the management, this is the philosophy of the management. So this is how I need to, I can take a call on a particular stock. That call may be long or short, whatever. But in case of cryptocurrency, and as I told you, there are thousands of currencies. So if you are entering into those currencies and you do not have proper knowledge about that currency, how those work, who started them, all those things, so there may be problems. So which may impact the trader, which may impact the investor. And when that market is going down, obviously we know there is a dominoes effect. So other market may also be affected because of that. So this impacts, this lack of knowledge of fundamental values impacts on financial markets. Then cyber security risk. When I was talking about the key characteristics of cryptocurrencies, then I mentioned one of the characteristic is cyber security. Yes, the transactions are more secure because of that blockchain technology, because of different nodes which we are using in cryptocurrency. But on the other hand, nothing is foolproof. At the end of the day, all those technology has been made, has been invented by human beings, and cyber security, those people, those hackers who are entering illegally into my system are also human. So it depends on that how they break. So this trust, the security factor is always at risk. So this may affect, and this affects not only cryptocurrencies, this also affects other financial market. And based on that, the investment will move from one market to one category of asset to another category of another basket of the asset. So this is the factor that affects financial markets. Systematic risk, as I was giving you an example, that systematic risk, that the impact of cryptocurrencies rise and fall will lead to rise of capital market or maybe to gold market. So that means if that market is going down, cryptocurrency market is going down, then it may also affect, because there are certain common fundamental factors which affect all those things. There may be some different, but some common fundamental factors are there which may affect all markets. So that systematic risk is also possible in this, and which will affect my financial market also. In 2022, I'm just right now forgetting that crisis name. So that in the cryptocurrency market fell down drastically. Almost $50 billion loss was there, and it affected the stock markets also. So this is how that risk of cryptocurrency market also affects the financial markets, capital markets, and money markets also. And then it's a speculative nature. Most of the people, when they are investing or thinking to invest in, they, if you will ask them the reason why do they invest, because they are fascinated with that return, the way it is moving up. So they are not considering the fundamental value. They are not considering that how much value this particular cryptocurrency has got. No, they are not fascinated by those things. They are fascinated by the profit return, that particular return, that particular cryptocurrency, that particular asset is giving. For example, I'll give you the same example that Trump issued its a digital currency, it issued a meme, Trump meme. So the market was, that particular value of that meme rose drastically on the same day, and people were finding that since he's a president, then they should also invest, because at least for 4 years, next 3-4 years, it is going to go up. But what happened after a few days? We all know the story. So people invest considering the uh, profit in the cryptocurrency market, in the digital currencies, but they uh, don't focus on the fundamentals of that asset, and which affects the financial market. So we need to understand this particular scenario, that how much speculate we want to take, how much speculative we want to be there while entering into this market. So this speculative nature impacts financial market. Then alternate investment. This is another point, that nowadays people are considering this cryptocurrency as alternate investment. That risk, why should I invest only in capital market? I can invest in cryptocurrency also. So obviously other markets, banks will also be facing the same music, that if the investor is thinking that, no, I need to invest, I need to get more return. Why should I? And when I'm getting the same uh, features which I'm having in the bank also, I can transfer my money to any country, I can transfer my money to any person using the same, then the money is also secure. Then so when I'm getting the similar feature, in addition to that, I'm also getting return. So why should I not go to that particular security? So obviously banks will be affected, then financial market will be affected, and people will, because people are finding now the alternate investment options. So no, and now I don't have only FDs to invest, fixed deposits to invest, term deposit to invest, or only in bonds to invest, or only stocks to invest, or gold. But now I can invest my money, not 100%, but at least I can invest 10%, 15%. And that also depends on the risk profile of the investor, that how much risk he wants to take, how much risk averse he or she is. So this provides an alternate investment, and this is how this alternate investment option impacts the financial market. And obviously we can transfer the money from one country to another country easily, so that it helps in cross-border transaction. So it also affects now. So here we were talking in general about the impact on financial markets. Now in this slide we'll be talking about the impact on impact on capital markets. So these digital currencies have introduced a new asset class, which enable retail as well as institutional investors for their diversification. We all know that we need to have a portfolio of different assets, diversified assets. So now why should I only have real estate in my basket? Why not to gold? Why not to bonds or fixed income securities or capital market securities? And now these digital currencies also give these retail investors as well as institutional investors different asset class, which is giving them return and which is also secure in terms of, if we consider about the cyber security factor. So this provides them, then obviously when institutional investors are taking their money from capital market to this cryptocurrency market, digital currency market, then obviously capital market will be affected. So this is how it affects it. And then comes of crypto ETFs like pro share bit strategy reflects market maturity and investors. And that is the reason that when this pro share Bitcoin such ETF were issued, so that means investors are investing nowadays in those things. And the only thing is we need to sensitize them little more. We need to make them more literate about all those things, more aware about all these things. And when they will be investing, then capital market will also have to change its rules of the game. So it impacts that. And asset managers like BlackRock and Fidelity have also launched their digital asset investment products. So this shows that how capital markets are being impacted. I'm hope that I'm going at the right speed. And then next is impact on banking and payment system. So these blockchain solutions like Ripple's XRP enables faster, more reliable, and more. This Ripple XRP is a platform that provides more security for these blockchain solutions. So that platform enables faster, more reliable, and more affordable cross-border transaction. So these are the things which a user of investment or user of financial market or banking market expects, that the money that I'm transferring or that money that I'm going to get, I should transfer it at a faster speed, or I should get it at a faster speed, and it should be reliable also. I should not have any financial transaction related risk. And then it should be affordable. When I'm transferring my money, maybe dirham to India to rupees, then I want to see that what is the cost, affordability of that or not. And so this provides that affordable cost, as we discussed in earlier, that because it removes those intermediaries from the market, so that cost automatically comes down, and that's how it becomes affordable. And I can easily transfer money in digital currency, in cryptocurrency to other country. Then this CBDC pilot programs, for example, China, India, or maybe also in UAE, the countries are running the pilot programs which are aimed to provide secure real-time digital payment solution. And the next is the traditional banks face disruption as DeFi platforms often cut out intermediaries. Like, you must be knowing that earlier we were transferring money from using only traditional banking systems. But when the platforms like Google Pay, when the platforms like Amazon Pay, when the platform types even from Etisalat mobile money transfer, you can transfer money. So when all such platform comes, then when the non-traditional financial market participants enter into the market, traditional participants are the banks. But when non-traditional means those people, those organizations where the main business was something else, and now they are also entering into this particular field. Maybe Kareem, maybe Do Money or Etisalat Money, when such players enter into the market with their digital currency, so it disrupt the traditional banking system. And that's how we need to understand that how it is affecting. Now I need not to go to the bank every time to withdraw money from the ATM and to purchase grocery. I can easily transfer it using digital currency also. And it's not the case that the person should accept it. Even the businesses do not have any choice. They need to switch to digital currencies if they want to be there in the market, if they want to be competitive. Because if they're finding a customer who can pay in digital currency, why would they say, no, I don't accept digital currency? And then they will be losing a customer not only for one time, maybe customer for lifetime, because that customer knows that you will not be accepting. So it's better to accept. And that's how all these things will affect traditional banking system and are affecting. So traditional banks will also have to think the alternate ways, the way they can be there in the market. And the other impact, I'll just show you this, what the thing that I was talking about. The three countries have fully launched a CBDC, the Bahamas, Jamaica, and Nigeria. They have fully moved to digital currency. And you know these countries. 134 countries and currency unions representing 98% of global GDP are exploring a CBDC. So they are finding ways to adopt it, or finding ways to use this digital currency, so that they also don't lag behind in the race of this new phenomena. So they're exploring, and that's why I was telling you that that's why, as a finance professional, we need to understand it. Even if we are not trading, we are not going to trade. Even if you don't want to trade, don't trade. I don't. But at least we need to understand, and all these data, all these figures are telling us the importance of this in our life in the time to come. And now just see this, in every country with an advanced retail CBDC project, CBDCs are intermediated, meaning they are distributed through banks, financial institutions, and payment service provider. For example, I'll just give you an example. This is happening in India, so I'm giving that example. But I will be converting that Indian example to UAE's reference so that you can understand. The central bank of the country has asked its selected big banks that you can issue your currency, your CBDC. So different banks, so obviously you need to have 100% money. Like I told you that stable coins that you need to peg. So they need to peg it with 100% physical currency. But instead of physical currency, they can transfer it through digital currency. And people can use, people can transfer. And these are the projects which are in advanced stage, which are running in different countries, different banks, different financial institutions, and different payment service providers are using this, and they want to move from paper currency, physical currency notes to the digital currency. Then all original BRICS members states like Brazil, Russia, India, China, and South Africa, they are already piloting a CBDC. And China, Brazil, India, Russia, they are already in very advanced stages. If you talk about G20 countries, then they are also exploring CBDC, with 19 of them in the advanced stages of CBDC exploration. Of those, 13 countries like Brazil, Japan, India, Australia, Russia, and Turkey, they are already in very advanced stages. So we need to know, we need to learn how to use, at least if we are not using. Again, I'm emphasizing on its importance, and that was the purpose that when we were discussing that what should be the topic of the CPD, then we thought that this should be there. So why regulations are required? To prevent financial crimes, because when something comes, then we as a human being try to find out the alternate uses of that asset also, that how can we use in our own benefit. And that one thing is to prevent financial crime. So government is regulations are required, and different countries, different central banks are already working on this so that they can prevent this money laundering and terrorist financing activities. To protect investors and consumers from fraud and manipulation, we need to have some regulations in place so that uh, we can protect those investors, those people who are trusting this currency, because this is new. And the whosoever is coming, he should not feel cheated that, yes, I thought that I'll be the first mover who will be taking first mover advantage, and then the person lost and other persons are making fun of him. So we need to have regulations to protect such investors and consumers, then only it will be promoted. Then comes to ensure the stability and integrity of financial system. Also, we need to have regulations, and to foster innovation while mitigating risk associated with digital assets. When we know that everything is safe and secure, then only other people will also be motivated towards more innovation. Now, what are the key challenges in regulating digital currency? The first key challenge is decentralization. This is the key challenge, that how are we going to regulate? The digital currency that I'm using is not only being controlled by within the country, within UAE or within any particular country, but is being controlled decentralized. So this is a challenge for regulators, for the governments to control that digital currency, to regulate when the currency is already, it's because this decentralization is not something you can remove from digital currency, because this is the very first characteristic we discussed. It's the nature. If it's not decentralized, then how can you call it digital currency? Because then that transparency, then security will not be there. So this is there, this is going to be there, but regulators need to find a way out to overcome that particular problem. Then anonymity and privacy feature is another characteristic. We don't know who is controlling. So if we do not know, then regulator find it challenging. Then global and borderless nature. because we discussed whatever the advantages were there. Now we are discussing them as challenge for regulators for regulating these digital currencies. So global and borderless nature, rapid technological innovation. Now the beams are there, shorts are there, which are also being used as digital currency. So the technology is changing very fast. So how and the regulations also need to be flexible in that nature so that they can catch up with the changing need market of the technology. They can be converted accordingly, and regulator need to be very, very, very active in that matter. And diverse use cases requiring tailored regulation. So that sometimes these diverse use cases require tailored regulation depending upon the country's requirement, depending upon that particular case's requirement. So these are the key challenges in regulating digital currencies. Now, because majority of us are in UAE, so I thought that why not to have some cryptocurrency regulations in UAE. So UAE is among the most welcoming nations in the Middle East, and we know that the government of UAE is doing so much uh, for the adoption of digital currency. So the government created specific regulations to welcome blockchain businesses into the market while maintaining compliance with financial regulations. Dubai established the VARA, that is Virtual Asset Regulatory Authority, in 2022, which will supervise all cryptocurrency operations, including exchanges, wallets, and token issuance services. Even Dubai government is also very serious about those money laundering practices. So to protect them, for the adoption of AML activities, anti-money laundering activities, the government is also monitoring them or observing them very closely, and that's how the government is very serious. Then the Abu Dhabi Global Market, ADGM, and Dubai International Financial Center, they have they are maintaining specific regulatory system to oversee digital assets so that they can find out, they can manage it properly in future. And transactions remain transparent because the government strictly implements anti-money laundering standards and know your customer requirement. And government is focusing, is observing all these things very closely. And last is UAE provides regulatory control, transforming the country into a global center for cryptocurrency, trading platforms, and blockchain startup ventures. Government is promoting all these things. So there is a bright future for digital currencies in UAE, considering the steps being taken to promote the digital currency and the ventures in the country. So that's how we need to know the things. So now the risk and volatility. Yes, I was talking about this. Terra Luna collapsed. So digital currencies are volatile, and it wiped around $50 billion in 2022. So this is the risk which is associated. And that's how we need to understand. And again, the same saying, don't put all your eggs in the same basket. Regulatory uncertainty leads to inconsistent policies and investor hesitancy because still there are not regulatory certainties. People are still doubtful about all these things. So government is taking proper care in each country, but then also people are not having that trust because sometimes those regulations also keep changing. I'll just give you a simple example. Before 2018, in India, the cryptocurrencies were totally banned. So a person could not invest in cryptocurrency before 2018. But then you need to move with the market. You need to move with the market forces. So you cannot say we will not be using when the entire world is using. So after that, in 2018, Government of India allowed to conduct a pilot study, and now that is in very advanced stage, and even the government has also launched CBDCs in the country in 2023. So this is how they are moving. So that means initially they were not in the favor of adopting digital currency, but now they had to move and they are in very advanced stage. So that's how fast, how quickly they move. So this is the scenario in all countries. So regulations are uncertain, and so this regulatory uncertainty leads to inconsistent policies and investor hesitancy. And then hacks and fraud remain concern, like the problem of Mt. Gox in 2014 and FTX collapse 2022. So these are some of the problem. You can simply Google all these things: Terra Luna collapsed, Mt. Gox or FTX collapse. Because of the time constraint, I'm not discussing in detail, but they caused huge losses to people. And now, opportunities ahead, I'll be discussing. So, this is the second last slide. So, I'll just take 2-3 more minutes. So, hopefully, I'll be finishing it on time. So, opportunities ahead: tokenization. Uh, Tokenization is assets like real estate and artwork can be digitized and traded via blockchain. So this is the future of the blockchain. Smart contracts and DeFi, digital finance, financial inclusion, these can be used in and are being used in different countries. Like digital currencies can reach unbanked population in countries like Africa, continental and Latin America. And last is what financial professionals should watch. They need to monitor evolving regulatory landscapes and global frameworks, evaluate how digital currencies affect risk return profile, whatever we have discussed. And now I need not to read this when we have already discussed, so you know that how important it is going to be in future. So pursue professional development in blockchain and digital asset management. So this is all from my side. These are not a passing trend. They are influencing monetary policy, markets, and investments. So finance professionals must adapt through education and active engagement. The future of finance is digital. Being informed is the first step to that leading. This is all from my side. If you are having any question, please ask me.
Well, I honestly think that it's really like it was really in depth. It wasn't a topic
Thank
for
you
like
so much.
60 minutes, but honestly, you have touched down like every single thing, especially in detail. So I'm impressed. Guys, if you
Thank
have
you.
any questions, so probably it's a very good opportunity to kind of ask a question to Dr. Rahul. And we already, by the way, we have one question. Meanwhile, of course, I think it's one very much important thing. We are very much lucky to be in a country where they are always very aggressive in developing new things, and they talk
Exactly.
about things and they invest into the new things, especially artificial intelligence, blockchain, and so many different things. uh, it is really important for our accounting fraternity also to be very much relevant, to keep ourselves updated. Vara is doing a lot of things, by the way, which is virtual asset
Right.
regulatory authority based out of Dubai, and now they are actually taking care of like a lot of free zones. By the way, they are already connected, so DMCC, DIFC, and all those free zones. And they have already, by the way, issued a lot of licenses as well. So crypto exchange, lending, staking, mining, blockchain. And that is actually attracting a lot of international companies and investors to be like part of this very dynamic community, of course. Now, I think this one part is very much important. The other part is, of course, to learn about these things, because things are moving in the right direction and very quickly. There is no time, honestly. Every other minute is like coming up with a lot of opportunities.
And
And
even that is also the one of the challenge for regulators also because the technology is
absolutely,
changing too fast.
absolutely. And I think this will actually kind of bring the major benefit to the banking industry as well, because
True.
like a huge population is still unbanked, and they are actually getting to that level where they can kind of bring them on board, and they can bank them through these technologies. We have one question, by the way. If I may, I can just read it through. If
Yes,
so,
please.
Bilal has asked that if central banks issue digital currencies, how can they ensure decentralization in a system that is inherently centralized by design?
Yeah. So when I was mentioning the example of India, where the Indian central bank has issued the CBDC, so they have issued with the help of various banks, major banks of the country, and I think around 14, 15 banks are there of so many banks in the country. So those only 14, 15 banks are allowed to issue these digital currencies. So that's how it is decentralizing this CBDC, but then also having a check, because they are private banks also, they are nationalized banks also, so both kinds of banks are there, but then control is there with the CBDC because they have to follow the central bank's guidelines, so that they can maintain that controlling as well as decentralization.
Perfect. Any other person who wants to like ask any question, so please feel free to drop a message. By the way, we have another webinar planned in few days. That's also with Skyline University.
Yes, I think it's on
Actually,
financial standards, IFRS, I believe.
IFRS, but update on the
Yes,
it's regarding
yes,
the updates, of course, and another
yes,
very
yes.
much very important area. Next month we
Right.
have some follow-up webinars for the corporate tax as well, and so that's, of course, we trying to like create a lot of new topics to be discussed, of course, as early as possible. I think so far there is no question, so I'll just kind of assume that uh, everybody actually enjoyed, and I really want to thank Dr. Rahul for your time, of course, and for all the efforts, of course. And I wish that we can actually have some extended time. Probably we can in the future we will try to arrange something which is kind of a like for like few more hours. We can
Sure,
actually
sure,
sit
sir.
together, have more
Sure,
discussion
sure.
about that.
I will always be happy for you.
Thank you so much. Thanks a lot. And so anyone who wants to be in touch with Dr. Rahul, you can see the contact details on the screen. You can take a screenshot and you can connect with him directly. Uh, Thank you so much, everyone. And thank you for joining today. Have a nice evening. Thank you.
Thank you, everyone,
Thank you.
for your time and patience.
Thank you, sir. Thank you. Take care.
Thank you.